What is happening today, traders? God bless each and every single one of you guys. Hope you're having a fantastic freaking day. We're going to be covering stock ticker NIO today, baby, and giving you a technical update on the weekly close, as well as showing you a stock that Nio looks almost exactly like, and did so before the last run. So if you guys are interested in this, right, slap the subscribe button, hit the like button, and let's jump straight into it, guys. Looking at Nio on the weekly time frame, I want to give you guys the technical confluence between IWM and BlackBerry and how that lays in to Nio, right? So all three are small cap companies, right? The IWM is an ETF, but Nio Stock runs very, very cyclically with the rest of the risk on asset market. Even though it is anchored to China, I want you guys to look at this schematic on your left, right? I'll see if I can highlight it to make it a little bit more obvious, right? Let's see. There we go. Took long enough. All right, there we go. So this schematic right here, guys, that's an inverted head and shoulders candlestick formation. We've talked about this religiously on this candle. Now look at where you had back here on BlackBerry, right? Exact same setup, completely different stocks. And when you look at the IWM run, this is pretty much exactly when you saw IWM run to an all-time high and break that flat top resistance. We've talked about it many times, and you saw it happen, right? That is exactly the same bottoming structure on Nio, right? This inverted head and shoulders. Now, when you broke this down-sloping resistance, you saw an absolute cannonball of price action. Same thing happens here on on BlackBerry, right? You break that down-sloping resistance, you see this thing run absolutely para-freaking-bolic, guys. And this is what I want to cover for you guys, that although you may be down in the dumps, right? Nio Stock has seen better days, but it's most certainly seen better or worse. And looking at this technical formation, I'm absolutely jacked, right? Just look at your inverted head, right shoulder, regardless of where you put in this bottom, guys. And I am a little bit biased to think it may happen in the mid fours, right? 450 or 459, right around that gap fill. You should expect to see a potential double bottom, right? Just like you had in that left freaking shoulder. The only difference between these two technical setups is in BlackBerry's technical head and shoulder. It was the left shoulder was higher, the right shoulder was lower. This one, the right shoulder was higher, the left shoulder was lower. So very interesting to see how that panned out. But then looking at where you are today, guys, just look at the difference and the similarities between the two stocks. I would hard press you to say, find like the Spider-Man meme, right? Who's who? Pointing fingers, who the frick is who here? And although you've been in this accumulation kind of pattern for BlackBerry for a longer time frame, right? So they had to suffer through worse. Look at Nio, right? Very, very similar. And truthfully, guys, what sprung this freaking price action was you broke your resistance, guys. Look at that. Almost the exact same thing. Broke your resistance, and you saw BlackBerry rise from the freaking ashes all the way up to 360% gains. That is absolutely cracked, man. Absolutely cracked. And you know what caught a lot of people, myself included? I had a stop loss at this freaking uptrend. You lost the uptrend. You went for a deep double bottom for that right shoulder to align with the left, right? Look at the pretty much exactly even between the left and the right shoulder there. Now look at Nio, right? You have an opportunity to double bottom at 450 here or 449 after that gap fill, but do not be discouraged or surprised if this thing comes back to retest this low 371 territory to potentially test that left shoulder, guys. Same way you did in this schematic, right? Came all the way back. Same way you did for BlackBerry, came all the way back, right? That is not the end of the world. And truthfully, guys, I am excited to know that between that horizontal resistance or support, and this trend line, right, you can truthfully only trade within this freaking triangle for another year, right? November of 2027 is the max this can get drawn out. But I have a lot of belief that this thing will not go that long, right? Look at BlackBerry. And as soon as you broke that down sloping resistance, this being a risk on asset sentiment market right now, driven by the small cap index fund, the Russell 2000 or IWM, this thing saw a beautiful freaking move, and it saw the full length of its inverted head and shoulders, right? Taking the full length of the neck to the head, placing that on top, right? And you even poked your head up a little bit further and then crashed back down. The move may not be over for BlackBerry, but the technical similarities here, guys, are absolutely striking. Now, I'm going to tell you two things, right? The technical target is around 2050 for this inverted head and shoulders pattern, regardless of how it plays out. The thing that I find more fascinating is if you took this as if this was a left shoulder, a humongous accumulative head, as if we were about to go up to $16, right? Let's say we do exactly what BlackBerry did in the exact same time frame. That is your head and shoulders, right? That is your inverted head and shoulders on the much more macro time frame. And I think for me, what would make sense here is the fundamentals have been nothing but improving. So if you really want to see this thing rip ass, right? This is the kind of like the atmosphere that you need to get it, right? So this shoulder, head, as if we were going to break out, come up to 15, come all the way back down to 771, and then really see that larger macro breakout, that would be an absolutely insane schematic that I honestly would not be prepared for, right? That brings you to another all-time freaking high. So the premises of this video is not to overhype you or by any needs to get you way more excited than you should be, right? Because this is totally an amazing stock, right? It's just gotten kind of the crappy end of the stick. But I truthfully believe the best is yet to come for Nio. And I'm actually very excited to see stocks like BlackBerry, right? Stocks that people have been so down on in the markets outperform major companies in the stock market, right? That is the freaking risk on asset market that we've been betting on for the last 6 months. And I do believe you're going to see this occur, right? I'm not a financial advisor. This is not financial advice, but I am absolutely jacked on Nio stock. So let's get into the technical analysis on Webull of just Nio alone. You saw a gravestone doji today, guys. Not a great week, and a rejection off of the 9-day weekly EMA after popping outside of this triangular wedge. You closed beneath it, right? Or back inside of it, you saw a larger increase in volume, which may make me believe that you are about to see either a candle like this, right? That would not be great. That kind of rejects you outside of this formation and brings you into the gap fill. Currently sitting at 459, right? That's your worst case scenario after this fake out breakout. But if we go to the daily time frame, we can kind of see you are right in the thick of it, right? And this thing could still break back up, but you have left a technical gap right around 497, right? So you could come back up, close that, and then see a sharp move down, or just fill it and keep going, right? That is really what it comes down to. Very disappointed to see you break down from that breakout, but it may just all be playing out, guys, that this thing is going to see that gap fill, a potential triple bottom, right? That was 437. This was 438. And then this would be potentially another touch of 438 before seeing your macro swing higher. And that's what's really encouraging for me is I do believe the best is yet to come. And I think the worst has already occurred on this thing. So the risk to reward is absolutely beautiful. Looking at the weekly volume here, guys, you are still getting a touch lower in weekly MACD down selling pressure, right? So you're starting to see the first bar that is slowing the bear's momentum. And that's a big step in the right direction, because as that continues, right, you see it here with the first bar being right here. You saw one more deep bar after the breakdown, and then bearish momentum slows. And you see a lot of these dojis and inverted hammer candles until you finally carve your bottom and see that big markup. That's kind of the phase I think we're in, right? We're kind of down here before carving your bottom and making your bigger markup, in my opinion. So we need to see the weekly MACD cross green, in my opinion. And I do think you're going to get it in the next couple of months here. On the monthly time frame, just printing a doji, nothing too significant. And I think the bigger macro picture is, what are you going to do after this quarterly freaking candle, right? Because you just started another quarterly candle. The next one closes in November. I do believe that you're going to break this trend in volume by November. And once that does break, guys, I expect a big freaking move, right? One like this that exits this freaking inverted head and shoulders and gets the freaking community back looking at Nio Stock, right? So that's kind of what I'm watching for the macro time frame, looking for a quarterly MACD cross for the first time since 2020. That kind of move is certainly going to get you that cross on the MACD and reestablish your bullish bias for this stock. Nio has done nothing but post further revenue and further profitability, so I am overall jacked and excited for what this thing is going to do in the future, guys. So until next time, guys, of course, God bless you and your families, and remember, the best is yet to come, guys. Peace. Woo!